The US Federal Reserve is likely to keep interest rates unchanged as it looks for more inflation and employment data, along with clarity on President Trump's economic policies. Furthermore, the central bank will announce its decision today, followed by a press conference by Fed Chair Jerome Powell. After cutting rates by a full percentage point in late 2024, officials are now cautious, preferring to wait for assurances that inflation will meet the 2% target and to understand Trump's fiscal strategies rather. Head of macro strategy of State Street, Tim Graff, spoke to Reuters about his expectations for the upcoming federal rate cut decision. Let's take a listen.
I think what we might have that's interesting to say is that, as you mentioned, the first cut, or the next cut, I should say, is expected in June. We don't actually see that as likely until maybe in September. The reason for that is you probably need at least a few more months of data on inflation to confirm that it's resuming the path towards 2%. And to my mind, it's not likely we'll get that confirmation in as strong a form as maybe the Fed needs to be comfortable easing again until probably May at the earliest. And then they always like a period of messaging what's coming. So that does put June in play, but in our view, it's still more likely to come a little bit later, maybe September. The things to watch for will be how programmatic that she might talk about future rate cuts being. That's really a signal that they'd be going every meeting where, it looks like the Fed is starting to skip meetings, take long extended pauses. The ECB doesn't really look to be in any danger of doing that. And my curiosity will be whether this is a continuation of the cut every meeting path that we've been underway, that has been underway for the last few meetings. I suspect it is. I think we'll probably get a cut at every meeting for the next, say, 4 or 5 meetings after this one, which isn't priced by markets. So I suspect that is still to come.